Hello, everyone. This is Pete Rigoni from SC&H Group. We appreciate your patience and ability to attend this conference or webinar I'm hosting with Cy. We do not have video, so you'll just hear our wonderful voices. I will be sharing my screen as there's information I want to share as we go through this webinar. I do want to also mention that the third person who was supposed to be co-presenting, Amy Hernandez, through unforeseen circumstances, unable to join us today. So it will just be myself and Cy from Polera Mazza. Cy, say hello.
Hey, everybody.
Cy and I did one about, I guess, a month ago on 3610. A little bit about PPP loans. Obviously, a lot has changed since then. We had the PPP Flexibility Act issued, impacting the loan process. More guidance has come out on 3610, and contractors are starting to request payments through that process. And there's been a lot of questions I've been getting. Specific to government contractors, because it is a unique industry and there are unique things that Congress just did not anticipate or think about when they issued these laws, and the CARES Act and the PPP loan and what the potential impact is, especially with the loan forgiveness. So we're going to cover some things that are new guidance, including accounting guidance that the AICPA issued that gives companies a couple choices. But so I'll go through that as well. And then I do believe you have the opportunity to add questions into the seminar. We did get some pre-questions in advance from registrants. So feel free to pop in questions and we can answer them. We will. If it's something we got to do a little research on, we'll connect offline afterwards and hopefully be able to resolve any questions you might still have. But for now, Cy, one of the things you and I have been talking about with 3610 is, in actuality, we're not seeing some consistency between how different agencies, whether DoD, Intel, or non-DoD, are handling it. Can you kind of talk about that and what you're seeing and some of the issues that people need to think about?
Yeah, so I think first of all, we've heard through the grapevine, some of the lobbyists that I've been talking to on a regular basis, that there's a few things floating around in the halls of Congress over on the Hill where they're thinking about clarifying a few issues. One point in particular that we've heard, again, this might never see the light of day, but to clarify that Congress did intend for 3610 to allow the recovery of fee or profit, which the DoD guidance right now and all the Intel agency guidance is expressly disallow. So that's sort of an interesting tidbit, but again, take it with a grain of salt. We'll see if it actually goes anywhere. More importantly, though, and directly to what Pete was saying, is that it's still all over the map because there hasn't been anything else from Congress yet, which is the impetus of where all of this is coming from on the Hill about trying to do something, is that they put this one paragraph in when they were rushing to get the CARES Act out the door, but gave no guidance except for what's in there, and then it left it up to the agencies to figure out, and each agency is doing their own thing. Now, it seems like DoD and the Intel community has sort of coalesced somewhat around the guidance that DoD put out, but I haven't seen the same thing happen across the board in the civilian agencies. And then the other issue is that at the very beginning of this, say in April, some of even the DoD COs just said, okay, or KOs, I guess the DoD, just said, fine, we will start paying you. If it's a firm fixed price contract, just invoice us your standard monthly invoice, we'll pay you. If it's time materials, just send us your average, we'll pay you. And they didn't do a lot of negotiation, whereas other KOs were really difficult and said, I want to see cost and pricing data, I want to see your buildup. And because of that, what's happening in reality is whatever was negotiated before, I've seen generally is still ongoing. There hasn't been sort of an attempt at renegotiation, not across the board, but mostly. And currently, when people are trying to talk to their KOs now, we're getting it all over the map still, with certain civilian agencies just saying, no, I'm not going to do it. The money's not in the budget. I don't have to do it. It's not a mandatory program. And I don't think it's in the best interest of the government. And at DOD, I've seen the same thing. Or more often now, they are willing to turn people back on, so to speak, or continue to pay people, but they want all this data, which is from the DOD guidance. It's essentially they want to see your costs, and only your costs were for 40 hours for your people, and only pay those amounts, no fee, no profit, none of that.
Yeah, and just you know, and I did a seminar with Amy about that. And the issue is that you are basically just getting reimbursed costs, and it's only going to be allowable costs. So if there's other costs that you incur as a company that are unallowable, they're not going to be included in that. So even less profits getting, so you have to cover that through other contracts or other funds if you're a company that, say you're 100% cost plus, and think about that impact. So what we're finding is, as always, there's inconsistency across contractors or across contracting officers, KOs, which, I mean, that's what happens when you don't have strict guidance, and it's basically left up to the agency, to the contracting officers, to their decisions. So, and if you do read the text, it does say it was supposed to be based on bill rates. So it's interesting. And the fact that they're reimbursing FFP and basically saying, hey, here you go. Well, those people are, if they did a good contract and it's not a lost contract, then they're okay. But we do see this as an issue to track. And if you're a company, a government contractor that's getting 3610 money, and you're struggling negotiating with that, just let them know, hey, there are other contracting officers doing this, but it's got to have open communications. But besides, the 3610 side, are we seeing anything from guidance on the interaction of PPP loan? Because I've gotten these questions, and I'll talk about it from my side after you. But with regards to the loans and the forgiveness, do you see anything that shows? I've seen a question between the 8-week, if you stick with the 8-week, versus electing the 24 weeks. Are those weeks set, or is there an option to kind of do something less than 24 weeks? And I don't see any interpretation that says it's something between the two, but it was either you elect the 8 or the 24. But what are you seeing on that? Because I did see a question on that.
Yeah, and I think it might have even been yesterday that there was some guidance put out that essentially allowed, and this, frankly, this is the interpretation that at least we at Polaris Mazda have been taking about the 24-week period in particular, where it's more relevant, is that it's 24 weeks. Yes, that's sort of the outside of when you can spend the money, but really there's nothing that says you can't apply for forgiveness sooner. And now that's been sort of officially clarified that you can apply for forgiveness sooner. And that should, we'll get to the why it's a should and not an absolute, that should end whatever other requirements and issues that you have. So as long as you spend all the money with the right ratios, no one's getting more than 100,000 annualized. If you're an owner, there's further limitations, right? You're not allowed, even though an employee can make, if you go the full 24 weeks, an employee could make 46,000. You could pay them and get forgiven for that. The owner maximum is like 20,000 something, because it's based off of 2.5 months.
Yeah.
Maximum, not the full 24 weeks. And the idea there, just so people know, is SBA was worried. They're always worried about fraud and misuse as their primary thing, is my experience. And so they're worried that an owner, an unscrupulous owner, or whatever, would lay off employees, and then they would use the extra funding to pay themselves for a longer period of time.
Right.
And if you have 5 employees and you lay off 5 of them off, you can take their portion of it for an additional 10 months, essentially, right?
Right.
And so they wanted to stop that and to de-incentivize employers from laying off employees. So you can't do that. You, as an employer, you can only still take the 2.5 months maximum, so 20,800 or something like that.
Right.
Max.
Yeah. And I did see that actually, and I'll share my screen. So I think what Sai is referring to is if you actually go to the loan, they put out there's 2 forms now, and there's a new EZ form. Hopefully everyone can see that. Sai, can you see that?
Yep.
And on the next page kind of talks about what he's talking about. So there's a checklist. So if you're eligible for these things, and when you go to apply for the loan forgiveness, they have put in an EZ form, and it's subject to certain requirements, obviously. So each company will have to evaluate whether they qualify for filing the EZ. But this did come out of the Flexibility Act. It's also available if people need to find the links. We've got a pretty good website people want to go to that gives links and talks about some things. Feel free to look at our Coronavirus Resource Center. And yes, that's a plug for us, but our team has put together a lot of information to help folks out, because we do get flooded with questions, and just having everything in one website really helps. But if you look, he's talking about the 24-week covered period. So for any owner, employee, self-employed, there's the 20,833 that he's referring to.
And because you don't have to wait anymore, like if you spend the money in 10 weeks or in 12 weeks or 14 weeks or whatever,
right,
and you just apply for forgiveness at that point, I think the benefit to the 8-week and electing to do the 8-week is, A, if you spent all the money, you might as well just ask for forgiveness.
Yeah, exactly.
Or like B, I think the other thing is the uncertainty, like things keep changing, but that can go either way. Because I've had clients who I've spoken with who are frankly furious at the changes that have occurred recently, because they got in right away. They were first in line to get the loan and immediately spent it the way they had to. And if employees rejected the offer of employment because they were making more on unemployment, they went and found people who haven't had jobs. Literally, one person told me this. They went and found people who hadn't had jobs in years, just to hire people to get their FTE counts up. And it did nothing to help the business, but they had to meet the 75-25 ratio at the time. Well, now they're saying, well, now it's 60-40 ratio. And if you give somebody an offer of employment and they reject it, you can basically keep the money and it won't impact your forgiveness. And if you can't hire people back because of the economic uncertainty, and the guidance on that is a little bit more strict now. You have to show that because of COVID restrictions in law, basically that says, you can't get back to full business operations. But if you could prove that, if you could show it, then especially if you got the loan at the very beginning and you were using the 8-week period, you probably easily could have shown that in certain ways, that you could have gotten full forgiveness, even if you were using the funds for other things. And so that's where I think the people who were right out of the gate, and early birds, if you will, actually got hurt a little bit. So I think it depends on what's going to happen, and no one has a crystal ball. If you jump in right now or if you wait, are they going to continue to loosen this up?
Yeah, I have heard discussions of will Congress come back out and just basically say anything under 150,000 or some other threshold just automatically forgiven, call it a day, and that would help alleviate a lot of issues to the banks having to process so many forms. I know we put that on our website. One thing on this form that I think that people need to understand, in this second bullet, I understand that if the funds were knowingly used for unauthorized purposes, the federal government may pursue recovery of loan amounts and or civil or criminal fraud charges. So you're the attorney. Tell me, what do they mean by unauthorized? And if that wasn't a planned question, I'm throwing it out now, because what do they mean by unauthorized? Does anyone know?
I think if you look at the CARES Act, and right, it said,
Yeah.
and then take the guidance and I'll put it together. You
Yeah.
can use it for payroll. You can use it for covered utilities, covered rent, covered mortgages. Those have been, the definitions of those have been somewhat expanded through the guidance.
Right.
And if you're using it for that, and you can document it, which you have to do for the application anyway, the forgiveness application, you have to give like proof of payment or receipts and show that, look, this was the money. Somehow trace the funds, because money's fungible, we all get that. But you can trace the funds and say, look, here's where it came in, and these dollars went over there, and I have almost like a balance sheet, or ledger is probably more accurate. Like a ledger, and you show it like you're balancing your checkbook, but you're balancing this the spending on the PPP. What I find interesting about this is, you probably heard about that guy that bought a Rolls Royce.
The Rolls Royce guy, yeah.
Well, but what's funny about that is, I think the only reason that guy has criminal issues or civil or whatever's going to happen to him is because he took the money and spent it on the Rolls Royce. Had his business been successful, or I know some government contractors are worried, and we'll get into this in a second too, that they haven't lost business, so can they still get forgiveness? I mean, the answer is yes. There's nothing in the law that says you have to have losses. But what that same person could have done, and I don't think had any liability, is take the money, spend the money for all the correct purposes and all the correct ratios and everything else. And if that business was still making money, take all of that money that would have gone to cost and is now essentially profit because of the PPP loans, and then afterwards taken that profit and gone and bought the Rolls Royce, there would have been nothing improper about that.
Yeah, I mean, that's frankly right. So this really goes to just forgiveness, right? So they're not going to forgive the loan. But let's say, and I have been having discussions in our firm, talking with our clients of, well, do you want forgiveness on 100% or on a portion? And it just uses a loan to shore up, like you said, the people that were early and spent it all. Well, I don't think anyone anticipated us being quarantined and restricted, into July. And frankly, I think early on, everyone thought it'd maybe be a month at most, 2 months. So I think as this drags out, the company spent that money. Yeah, those are the clients that are going to be wondering, well, heck, I should have just kept the loan, so that when I do get customers back or get, contracts back up and running, so I think that's an important part to consider. And I think that dives into the next question that came up with, that you and I have been with someone else that reached out to you, is the cost plus world. And that is unique to government contractors. No commercial company has to deal with this. So in the cost plus world, the FAR, and I actually pull up the implementation guidance I'll share about what do you do with credit. So if the loan is forgiven, and there's a the FAC implementation guidance that talks about question 23 regarding FAR credits, FAR 31215, credit for provision allowable cost and payment clause, right? FAR 52216. And so they're basically saying, if you have cost plus contract and that loan's forgiven, it's a credit, and any reimbursements, tax credits from whatever source should be treated in a similar manner. So if you're 100% contractor on cost plus, and you forget and you get the loan forgiven, you're basically returning it back to the government. So it's like, hey, but where it really normally you say, okay, that's fine. But the issue comes down to, in the IRS has said those costs are non-deductible. So, okay, now you've got non-deductible costs, but you're effectively giving the money back to the government because they gave you a credit. So I think it does put you at a negative position. So I would highly recommend any company that has significant cost plus, and what that number is, it's going to be a facts and circumstance basis. You know, if you've got 1 or 2 contracts at cost plus, maybe that's not as big a deal. But you know, I have some contractors that are pretty much 100% cost plus and they have to give that back. PPP loan forgiveness may not be worth it in the long run. And maybe they just treat it as a loan, they shore up their balance sheet, they keep it, pay the interest rate, and then pay the loan back over time, you know. So I think these issues obviously were not anticipated. And you know, when you're dealing with the FAR, it's also why I always recommended that really 3610 was specifically put into place for government contractors, because I don't think they meant the PPP loans were meant for government contractors, frankly, because of all these issues that are there. But there wasn't clear guidance on that. So every one of my contractors, for the most part, went out and got the PPP loan. So now they're struggling with the mechanics of this. So I just want to, you know, make sure whoever you are, if you have, you know, PPP loan forgiveness you're considering, you have to look at your contract mix and do some modeling as to what that looks like. You know, what are your thoughts on that, Si? I mean, you see anything different that conflicts with that?
No, except just, you know, hearing through the grapevine that Congress, again, if they ever do anything about this, was potentially going to override the IRS. But I think all of that stuff is stalled out.
Right.
So we'll see what happens.
I think it was what Grasserly that said that wasn't their intent, but you know, they had an opportunity to address that, right? And they didn't. And it looks like HEROES Act that's passed the House, is stuck in the Senate, and whatever comes out of there that was going to address some of this stuff is kind of floundering. So yeah, I anticipate that we're not going to see much. Maybe after an election, but until then, there's going to be a lot of uncertainty on this. It's where we are. But I think having, like you mentioned, tracking the cost, tracking your PPP loan money, having it in a separate account, making sure you're able to track what the funds are being paid for, and if you end up applying for forgiveness. With regards to the need, I know there was a lot of back and forth on what was, you know, would you meet need? And then at the last minute, they came out with guidance that said there was automatic need deemed for loans under 2 million. What do you see is going to happen potentially if a contractor, let's say they really didn't lose contracts, they got over 2 million, they were able to stay profitable, you know, not maybe as profitable, but they were still profitable. Has there been any guidance or discussions of what Congress is going to do, you know, if they come in and say, why'd you take this money? I mean, has that been discussed? Because I see that could be a risk, right? If they want to come back and make an example, especially depending on what happens with the next election, and if people want to show, you know, in Congress and want to show, hey, we want to cut out fraud that occurred, we want to make examples. I mean, what are your thoughts on that? What would be your recommendations?
Yeah, and so I think the main thing with that, because technically they're not, the DOJ or whoever were to look into this, they wouldn't be able to make a false claim act or other claim if you have like a reasonable basis for the need analysis, just because of how broad it was. But what I could see happening is if it looks like you never lost, you never hit like a bump in the road at all, they could try to use that sort of after the fact Monday morning quarterbacking to point out or to pick out which contractors or which companies they want to give extra scrutiny to. Mm-hmm. So if I think practical perspective, that's what they could do is really dig into the need analysis that you made, you know, for talking people over the 2 million that you made. And frankly, I think another piece of that could be if you took out the loan and then you never spent it,
right?
And you never really used it, and you're like, well, I don't know if I just hold on to this, I'm not going to seek forgiveness. I don't know what the harm to the government would be in this case, or what their damages could be, but I could see a possible case if they got really aggressive, where they could say, well, when you took out the loan, you made a certification that you were going, not just that you needed it, but that you were going to use the money for these particular purposes. And you haven't used it at all. So when you combine those two things together, not using it for the purposes you promised you're going to use it for, and not and making the need certification, which in retrospect maybe looks suspect in their mind, because to the government everyone looks suspect, is kind of what I feel like sometimes, is that what are they going to do with that? And I think if somebody was to be really aggressive, or someone at DOJ wanted to make a name for themselves, they could start digging into stuff like that and combining things. Would they win these cases if they did like major fraud against the United States, False Claim Act, bank wire fraud, the general stuff they always throw in to an
Right.
FCA case? Probably not. That would be a really tough case. But I think it's a question of the people who get caught up in this. Do you want to fight it? Because I've fought cases before where we've won at the end of the day, but it took, let's say, 5 years. And finally, DOJ, I have one example where DOJ wanted $150 million. We settled it after 5 years for $160,000, basically because DOJ wanted to save face and they didn't want to just walk away. And the client was like, well, go through trial. How much is that going to cost me?
Yeah.
So,
yeah. Well, as always, attorneys will be in much need as this goes through. So, and I assume CPAs, if they need help calculating things, one of the things I also wanted to cover while we're on this call is, let's talk about the Flexibility Act and some of the mechanics that I think people have had questions about. And I'll go to our lovely site again. Just kind of talk about some things. One of the things, if you're an S corporation shareholder, the health insurance payments on behalf of partners or self-employed, and of course the shareholders, is not a forgivable expense. So if people were wondering about that, that's not. As well as retirement plan costs for the S corp shareholders continue to be allowed, but the retirement plan do continue to be allowed as a payroll cost, but not partners of your. I have some clients that are actually partner. They have a partnership return, so that's a negative to any retirement plan cost for the partner is not part of the payroll cost. So for any clients of mine that are attending, if you file a partnership return, make sure when you're calculating those retirement costs, you're not including anything paid on behalf of the partner. And as I'm pointing out, they did add the full loan app versus the easy loan app, the 35A easy that I pulled up. So let's go through who can use the easy. So it is the borrowers that are self-employed and have no employees, or borrowers that did not reduce the salaries or wages of their employees by more than 25% and did not reduce the number of hours of their employees. And it says ignored FTE reduction. So, some of my clients, they're basically a sole owner and they have a lot of 1099s, a few employees, but a lot of 1099s doing work. Well, this helps them now. So, they at least put that in there. Again, I did not have many contractors that lost significant numbers or had to lay people off. Again, the ones that did get impacted the most were my Intel customers that were pushed off site, to a quarter of their workforce, if not more. But again, I think 3610 is a better option for them. And, maybe not even want to ask for forgiveness given the cost plus nature, but if most of those are T&M, so it's not an issue. So if they want to get the cost forgiven, I see that as less problematic. So the easy does help out. I do want to point out some things we're still monitoring is, the Treasury 25 through 30. We need some guidance on some things. They did issue the 24-week period. So Cy mentioned, at least if you have 12 weeks and you're out of the money, just apply for it and get it done. Again, the tax treatment of forgiveness of expenses, again, that is It's still non-deductible according to the IRS at this point. But again, this is going to be a 2020 tax return issue that hopefully they'll address at some point. But again, if you go for the PPP loan forgiveness and you have cost plus and you're crediting it back on your contracts, and is that credited back on contract closeout? There's a lot of up in the air on that with cost plus. And again, there's talk of loans of 150,000 or less that I mentioned. 3 to 4.5 million loans were for less than 50,000. It would be nice if the government did something like that, but who knows? We'll see. So I did want to share these things with people to let them know kind of what's going on. As always, there's just a lot of uncertainty in whether it's us or if you have other CPAs and or other consultants helping you, just make sure you understand what's going on working with your bank rep. So, size, I know there are a couple other things you wanted to touch base on. What are your thoughts that I've missed today? We're about half hour in.
Yeah, I think a couple of the things that I've been asked questions about just in the last 48 hours are things dealing with under the new Flexibility Act, some of the safe harbors that were added. And
Right.
I know we kind of touched on it a little bit earlier, but to go in a little bit more detail, the idea that if you can't hire people back because of COVID shutdown issues, it used to be when the Flexibility Act first came out, it wasn't really clear what that meant because it didn't say COVID shutdown. It said due to the economic situation, you just can't hire people back. Well, it's sort of been clarified now that you have to show local ordinances or things of that nature showing, if you're a restaurant, at the beginning, you couldn't do any dine-in service. And let's say you had no exterior tables. You could say, I couldn't do it. Or we don't do delivery and takeout. Okay, fine. Then maybe that would be a basis. You show the ordinance and you show the type of business that you have. You couldn't hire anybody back, right? Or something like that. And then now you're open at 25%, or now you're open at 75%. And showing, look, this is what the law said. So because I'm not allowed to open, if you're a gym or whatever, I'm not allowed to open. So I couldn't bring people back. However, given the guidance that has come out, it doesn't seem like if you're just a normal services business and you could arguably operate, the law didn't prevent you from operating, but you didn't have any customers. This seems, the new guidance from SBA doesn't seem to give you a pass for that.
Right.
Or clearly give you a pass for that.
Yeah.
And the other piece is hiring people back. So if you've given an offer of employment, it has to be written, and you have evidence that the person rejected the offer of employment, then you also get a pass for that. So you don't have to show that you've brought your FTEs all the way back to normal in either of those two circumstances, if you can show it. What I've seen recently, as in this morning, were some questions about, well, what if I had to lay people off and they now got other jobs, and I know that they're not going to accept my offer, and can I just offer jobs to a bunch of people that I know aren't going to accept, and then just say, here's the written offer, here's their rejection of it, I'm covered. And that's where it gets a little gray, because it says it has to be a good faith offer of employment. And if you have a record that you knew something wasn't ever going to work, or you never intended for them to accept and they really didn't have an opportunity to accept or something like that, I think it's a real question as to whether or not that was made in good faith. How anyone's ever going to know at the end of the day, unless there's sort of email change, or whether it's even going to look at, that's a whole other issue, right? But just so people are aware.
It's going to come down to documentation and we know, if you got an email or something out there that says, well, we know they're never going to accept, let's just send this low ball offer out and we'll at least met them. But they got to make a good effort, I would imagine. Like you said, good faith effort.
Yeah, and I had one person where their employees, they laid them off and they were hired by the prime, and the subcontract has a non-solicitation provision. So the sub actually has to ask the prime for the permission to ask to hire back the people who left. Otherwise, they'd be in breach of contract. And so the prime is now in a position of, and they've sort of in their correspondence admitted that the people will probably never take the offer. So does that blow up the good faith basis? And then from the prime's perspective, they don't want to hurt their subcontractor, but at the same time, they're now using these people and they have a non-solicitation and they don't want to waive the non-solicitation. So it can get a little messy.
Yeah, that sounds painful. That just sounds painful. So, well, we do have questions, so I'll just start from the top, and maybe we can address those between the two of us if we can. So one of the questions appears, cost type contracts. This is, what are the presenters' opinions on contracts not covered by Section 3610? Or I guess what they mean is they're unable to get reimbursement, or other type of contracts. Has there been any discussions in Congress about extending the date to sorry, it's hard to read this thing. But about other contracts. So look, I again, if all your T&M and FFP, I don't see where there's a requirement to credit the money back. And again, you have to segregate anything that's 3610 versus the PPP loan forgiveness, and making sure you're not double dipping to that aspect, and just have good tracking of that. But again, as always, it's always safer to just not go for forgiveness if you're going to have any doubts or questions about how it's going to get applied in the future. Sai, I think you and I have talked about that, but is that pretty much what your thoughts are?
Yeah, if you're strategically using it, you could have you could take PPP right up to the 100,000 per person, all that kind of stuff, spending all the expenses, and then once that's exhausted, or if you have costs that are not allowable under PPP, like the salaries for people in major metropolitan areas that are over 100,000, you could get 3610 to cover those costs.
Right.
And that would obviously be helpful. You can kind of put them together like that. But I think one of the things that people have been really frustrated about, like some of the clients I've talked to, is how complicated some of this is for government contractors. And I think they get frustrated when, like, they'll come to us. I'm sure maybe Pete, you've had the same thing. People come to us and they're like, well, what is the rules and what is this? And there's all these implications. There's tax implications. There's like the farm implications. There's a whole host of like accounting implications. And then there's legal implications with the certification. And I think people get frustrated when I say, well, look, I don't really know the tax. You got to go, who's your accountant, or I can make some recommendations from the tax account. And then there's the GovCon accountants, and then there's the lawyers. And I was like, unfortunately, to get a full picture, it's not one group. I haven't talked to anyone who singularly is able to answer all the tax, accounting, and legal questions in order shop.
Yeah, there's no easy answer. This is not let me just look it up and like look up the definition of something and there's your answer. No, it's not. There's a lot of, and it is all facts and circumstances, because not every contractor is the same. And you're absolutely right. So next question is, some agencies are considering reduced schedules, closures extending beyond September 30. Have there been any discussion in Congress about extending that end date for 3610? I have not heard anything. Have you, Sai, in your lobby calls?
No, except the general view that they're looking at what's going to happen. And I just got an email this morning, in fact, from one of the client has this like various religious schools or other like non-public schools that have been shutting down at least through January. So I think we're starting to see more of that. That has nothing to do with PPP, but I think the point is I think we're going to start seeing more of that happening. I've heard companies who have told their employees we're not opening until October, major, large companies, that they're not letting people back in until October or maybe later, right?
Right.
So with this, as it continues to build, I think we get into the end of the summer with what Congress is already doing. I wouldn't be surprised if they start taking some of this stuff on.
Yeah.
But to your point about the election, I don't know, and not to get political.
Right.
There's a very stark divide, I think, between some of what's going on and like the administration's position on things and wanting to reopen.
Yeah.
I think there might be paralysis.
Right. Well, that's sadly what happens when you have a very evenly split political leadership right now between like I said, you get something out of the Senate, but maybe not the House. So yeah, but it's election year, so we could see gridlock as always. So yeah, someone asked, I guess, looking for the link. It's not an SBA fact that I was pulling up. It's actually at the Defense and Pricing Contracting. So if someone wants to email me afterwards, or they can go to our web, I will provide them with the link to the actual Q&A that I pulled up from the DPC. My email is pragone@schgroup.com, and I'll be happy to send you any links to where the fact was that I was pulling up, as well as other guidance. Next question. So someone asked, and we have had this question, which is better? Is it better to actually get the loan forgiveness, or should I just return the loan and get the tax credits through the FFRCA? So I actually had a client do that math, and pretty much it was a wash, and it was better for them to take the FFRCA tax credits, just because less headache. It is a dollar for dollar reduction of payroll costs or payroll taxes. You're not having to deal with the loan forgiveness. You're not having to deal with anything else. And it's, effectively when you do your rates, your fringe rate might be impacted somewhat, but for the most part, that one is, to me, a little bit less issues than doing the PP loan forgiveness if you have significant cost plus contracts. So yeah, is that an option? But again, like anything, you got to model it and see what it means, especially since they added in the part about welfare benefits, health benefits, and adding that in helps out with that math. Another question is how can we track the PPP versus Section 3610? Well, you should have separate GL accounts and bank account for the PPP loan money, just for tracking purposes. And then as you want to draw it down, you can apply, you can track it. So this is just, get with your accounting, whether it's internal, your controller, bookkeeper, whoever it is, your CPA, on how to track this. You should have under a separate actual GL and labor code called 3610 payroll, because that's going to be a direct cost as you get reimbursed on 3610. So you should absolutely have a separate labor code. If you're on Deltec or Uninet or whatever you're on, even in QuickBooks, at least have a GL account that tracks your 3610 money, the cost that you're paying to that employee related to that you're billing out. I mean, it's just having a good system to track that. And I'm happy to be available if you have any further follow-up questions on that.
One thing, just like a broader brush that I've also gotten a lot of questions in the past couple of days, is I think people are surprised about that there is no requirement to show losses. And just to be clear, for PPP forgiveness, you don't have to show losses. Once you've made the need certification, that's sort of the end of that analysis, and everything with regard to forgiveness is a math problem. Now, granted, it can be somewhat complicated problem,
it's math.
but it's just a math problem. And so there is no other, well, did I need it or did I have losses? Or I know the way the application is set up, it says, you know, okay, enter your payroll costs to retain employees. And everyone's like, well, what does that mean? Did I use it to retain employees? If I didn't lose income? Don't get hung up on that, because that doesn't mean anything. The need analysis, if you have money, if you have a PPP loan, you already made that. You already made that certification. Yeah. That's sailed. So now it's just a matter of a math problem.
Yeah, for sure. Another question is, do I need to keep the same number of FTE and keep each employee hours at the same within 25%? I guess that's to whether you're trying to determine whether you apply for the EZ form or not. Yeah, I'm not sure the context of that question, but if someone wants to ask that, wants to email me offline, I can get more context of that. But again, I think it's determining eligibility for the EZ form versus the the full form.
Or to get forgiveness, maybe like if you have to eliminate the reduction in pay and the reduction in hours and the reduction in FTE to get the one safe harbor. Right. But then because of the other couple safe harbors we talked about, there are maybe outs if you couldn't bring people back for the other reasons. You made them an offer or something like that, then you don't have to bring your FTE count all the way back. But otherwise, you would have to eliminate all of those prior to the application. Oh, and the other point on that is it used to say, the CARES Act said June 30th. So that was the date they were going to look at, which was before, I believe, pretty much, maybe not quite everybody, but for most people, that was right around the time or before you were going to seek forgiveness. So they were going to look at that date and say, did you bring all the FTEs back? Did you eliminate the wage reductions and everything? Yes or no? Then you apply and you can check that box. Well, Congress changed the June 30th to December 31st, but without changing the rest of the language in the act. So now it's very confusing, because now it says when you submit for forgiveness, which might happen today or in a month or 3 months, you have to, the act says they're going to look at whether you brought everybody back by December 31st, even though you're applying for forgiveness long before that. So it's sloppy drafted by Congress, but I think the best interpretation is you look at when you apply for forgiveness. Did you eliminate it, or do you have the paperwork under those safe harbors we talked about to show that you did make all attempts and everything? And if so, then you shouldn't be dinged for forgiveness.
Yeah, that makes sense. One thing I do want to cover, since I am the CPA here and I deal with clients that's asked, how do you account for the loan forgiveness? And for a while there, the AICPA had not given any clear guidance. So we had been using international accounting standards that address grant revenue and grants as a guide. But the AICPA finally issued their guidance, and thankfully they actually gave a choice. One of which is you can treat it, and it's a policy election, so each company has to determine how they want to handle it. Is you can either treat it as debt and debt forgiveness, and what the accounting requirements are for that. So the requirements in a nutshell on that is you record the amount into income once the forgiveness has actually occurred. So until you actually have the formal forgiveness from the bank, it basically sits on your books as a debt. And then once the forgiveness occurs, whatever that amount is, you would record it through other income, because this is unusual and infrequent. So it's below the line, it's not operating income, right? So for those who elect that, they'll pull the income in all at once in the period that the forgiveness occurs. The other option they gave was to treat it as a grant, a conditional grant. And again, it's either or, you can't split it between the two. So it's grant revenue, it's conditional revenue as the costs are incurred that are going to be forgiven. So let's say you do the math, and each month over the 8-week period, it's 2 months. and it's 50,000, and I'm ballparking it per month to 100,000, you would record grant revenue of 50,000 in the month that it's occurring until you've, met the total amount that will be forgiven. Where companies that may want to take that approach, if they have quarterly financial covenant requirements, I could see them wanting to pull that income, through as it occurs. But you got to make sure you're doing it right, and you don't either over or underestimate what that number is. The other option is, of course, you take the lump sum, and that could drag out, like you say, until they actually do the forgiveness. So it is going to be an exercise of what makes the most sense for each contractor and each company as they go through and determine the revenue recognition. If you have audited or reviewed financials or compiled financials that have to be GAAP based, make sure you're talking with your CPA before you make the decision, and make sure you understand what that looks like, and have your, whether it's internal controller, accountant, outsourced, that you're all on the same page of what this looks like. So I did want to touch base on that. Well, I don't see any other questions. We're about 50 minutes in, unless anyone wanted to add in some other questions through the chat. I just wanted to give a couple, again, things to consider. Again, we have great resources on our website at SC&Hgroup.com. I know Cy does at Polaramaza as well. His team's been putting together some great content for people to go to. It's tough for us to have, one-on-ones. That's why we try to do these seminars, to at least give some guidance as best we can. Again, this is ever fluid as guidance comes out. And there is no easy answer, right, to some of this stuff when it comes to the government contractors. When you're dealing in the cost reimbursable world, and if you get 3610 versus PPP loans. So it's going to come down to documentation, how good your accounting system is set up to track this stuff, and make sure you're not open to putting yourself at risk. Make sure you can stand up to any scrutiny. But I do want to appreciate Cy as well as Boost in helping market this. Again, we're sorry Amy couldn't join us, and wish her the best, and we'll keep an eye out for future things. So Cy, anything else you wanted to add?
Yeah, I think it's like you said, and just keeping an eye out and making sure that everybody knows what's happening. If there isn't an absolute need to seek forgiveness, I have no reason really to say this except for like my own crystal ball, I guess. But if I had to guess, I would say that if anything happens in the future, it's not going to be more restrictive. I think the caveat to that is if something really blows up and there's just rampant fraud that comes out, like in October or something, the IG comes out with, or there's all these DOJ investigations or something, then maybe they would crack down. But I don't really see that happening. I think it's most likely that as more bills get pushed through, or there's more economic pressure, or with the spikes that are going on all over the country right now, with the COVID, I could see maybe that the government and Congress would actually get on the ball. So if it were me, I kind of feel like I might hold on, if I don't need to seek forgiveness, to wait till maybe even more guidance and more things are clarified. And if you have the 24-week period, you can just keep spending the money if you haven't spent it already, or frankly, because money's fungible, I think there might be some way where if you spent money and you weren't sure if things were allowable, because you have the 24 weeks, if you track the fund flow and say, well, look, the amount I took out on the loan, I have spent over on the correct things or whatever in the right proportion. And I did it from, June 20th to October 5th or whatever. And you could track that and then ask for forgiveness later. That might be a way for people who feel like they got hurt by the changes, or if new
Right.
changes come out, to kind of keep tracking that.
Yeah. And as always, I think the longer this goes, hopefully Congress will provide some more clarification, provide more guidance, maybe issue new legislation. But as we get closer to election, it may be less likely. So, well, again, Cy, thank you so much for being able to participate, and we appreciate everybody that was able to attend. If you have any questions, again, you need to reach out to us. Again, it's Pete Rigoni at SC&H and Cy Albert Mazza. Our website is scHgroup.com. Cy, if you want to give out your email address, feel free as well.
Yeah, my email address is just I as in India, ALBA, so ialba at polaromazda.com, which is on the screen, how it's spelled.
Yeah. And I am PRAGONE at SCHgroup.com. So again, thank you, everyone. Be safe and take care.